These two assets will make you money when the dollar collapses, according to Jim Rogers. When faced with the potential for a dollar collapse, legendary investor Jim Rogers has some insightful advice on how to protect your wealth. In this video, we'll look at Jim Rogers' 2 suggestions for assets that could help you safeguard and increase your money in these turbulent times. Now, let's get started. It's important to understand the concept of such an event before we get into detail about the 2 assets Jim Rogers suggests as safeguards during a potential currency collapse. The U.S. dollar has dominated as the main reserve currency for decades, fostering a feeling of stability and dependability in the global economy. Like any other currency, the value of the dollar is subject to swings in value that are mostly determined by economic and geopolitical variables. Investors should be mindful of the prospect of a dollar collapse even though it is not a given. Such an occurrence would have extensive repercussions, affecting not only the United States but also the entire world's financial system. The loss of purchasing power, which results in a sharp decline in the value of the dollar, would be among the most important consequences. The price of goods and services would consequently skyrocket, driving up inflation. A catastrophic economic crisis could result from further destabilization of the already precarious economic stability. The guidance and viewpoints of seasoned investors like Jim Rogers become especially pertinent in light of these potential implications. Jim Rogers is a legendary person in the financial industry, who, for those who are unfamiliar, is renowned for his smart predictions and prudent investment approaches. He rose to fame by establishing the Quantum Fund with George Soros, and the financial industry holds him in high regard for his foresight in predicting both the development of China in the early 2000s and the commodities boom of the 1970s. Jim Rogers' advice carries a lot of weight in the world of financial planning due to his stellar track record. In times of economic ambiguity, such as the potential for a dollar collapse, he promotes the use of wise and proactive steps to protect one's money. Jim Rogers places a strong focus on investing in precious metals, especially gold and silver, because historically speaking, they have served as reliable hedges against currency devaluation and inflation. These metals have withstood the test of time and continuously proven their ability to hold their worth despite economic unrest. Over the course of human history, gold has held a special role as a store of value. Gold has always been a symbol of power and wealth, and its fascination goes far beyond the world of economics. Investors and governments alike turn to gold as a safe haven asset during periods of economic uncertainty or geopolitical unrest. Its rarity and non-corrosive nature, among other special qualities, add to its appeal as a long-term store of wealth. Additionally, gold is used in many different industries, such as jewelry, electronics, and dentistry, which raises the demand for it. Its enduring worth is supported by the combined demand for it as an investment and an industrial commodity, which makes it a desirable asset for people seeking stability and security during uncertain economic times. Silver deserves equal consideration to gold, even though gold frequently dominates talks of precious metals. The intrinsic worth of silver is very high, and it has a long history of use as a commodity and a building material. Silver is an essential component in many industrial processes, including electronics, solar panels, and medical uses, in addition to its use as money. During times of economic upheaval, it is a desirable investment due to its adaptability and broad range of applications. The lower price of silver as compared to gold is a big benefit. Because of its affordability and accessibility, silver is a desirable choice for investors with a range of spending levels because it enables them to diversify their holdings and successfully manage risk. Additionally, because silver is more readily accessible than gold, it is subject to larger price swings, which may give possibilities for investors looking for quick profits. Silver and gold both have precious metal properties in common, which makes them crucial elements of any well-rounded financial portfolio. Their resistance to currency depreciation and economic upheaval is boosted by their inherent worth, rarity, and historical relevance. The correlation between precious metals and conventional financial assets like stocks and bonds is typically negative. The value of precious metals may increase as a result of this negative correlation, giving a counterbalance to a diversified investment portfolio when other asset classes undergo downturns. Jim Rogers' suggestions for purchasing agricultural property are informed by his in-depth knowledge of the dynamics shaping our society and the vital role that agriculture plays in feeding a growing world population. Food demand is increasing together with the growth of the global population. A possible opportunity for long-term growth and revenue production, given the restricted amount of land available, is investing in productive farming. The benefits of agricultural land as an investment are numerous and compelling. Owning agricultural land offers the chance for both capital growth and consistent income streams, unlike many traditional financial assets. Fertile farmland's value is projected to increase as population development fuels a constantly growing demand for food production, offering investors the chance to make large capital gains over time. A physical and productive asset that is distinguished by capital appreciation is agricultural land. Contrary to stocks or bonds, which largely function as abstract representations of wealth, farmland offers a tangible and necessary resource, the capacity to raise crops. Investors can use the land to create income by cultivating crops or renting out the land to farmers thanks to this productive capacity. A great complement to a diversified investment portfolio, farmland investments also frequently show poor correlation with conventional financial markets. Farmland values have historically proven to be resilient in the face of economic downturns or market volatility. Even in times of economic uncertainty, there is a generally stable market for food, giving landowners a reliable source of revenue. Additionally, agricultural land stability as an investment is not only a result of its intrinsic value, but also because it is less vulnerable to short-term speculative trading. Farmland values are more based on the realities of supply and demand for food in the real world than financial assets, which are more prone to speculative bubbles and sharp price swings. A sustainable and morally upright decision would be to invest in agricultural land. Responsible land management practices can be extremely important in reducing environmental effects as the globe faces difficulties relating to climate change and sustainable agriculture. The satisfaction of making a positive contribution to environmental protection and food security can be found by investors who place a high priority on ethical and sustainable investing. Recognizing that purchasing agricultural land has obstacles and factors to be taken into account is important. Potential investors must fully comprehend important factors such as land management, crop selection, and expertise in agricultural practices. Farmland needs constant care and management, unlike financial assets, to ensure maximum output and returns. Additionally, investments in agricultural land may be impacted by geopolitical and regulatory considerations. The viability and durability of investments in this industry can be impacted by policies concerning land ownership, agricultural subsidies, and trade agreements. For investors hoping to effectively traverse the complexities of agricultural land investments, conducting in-depth research and getting expert assistance are essential measures. In addition to general assets like precious metals and farmland, Rogers' sensible advice emphasizes the significance of diversity as a key component of any effective investing strategy. Spreading investments over several asset classes, industries, and geographical areas is known as diversifying one's investment portfolio. This strategy lowers exposure to certain risks and potential losses. The benefit of diversity stems from the fact that various asset classes typically respond differently to changes in the market and the state of the economy. For example, while precious metals like gold and silver can act as a safe haven investment during difficult economic times, they might not perform as well during times of economic expansion. With this, we come to the end of the video. If you enjoyed watching, don't forget to like, subscribe, and share today.